Welcome back. You're watching The Money Show on ET Now. Well, we are dedicating this show to, of course, real estate investment and, not just investment, but also for those individuals who want to purchase a house. How far should you stretch your finances? But now let's, move away from residential to also those looking for property as an investment perspective. Now, of course, buying property, we know it's associated with two things. One, a high value, usually running into crores. The second is liquidity. It can be obviously difficult to sell a house as opposed to, selling shares. But guess what? Here's an investment product that helps you solve both those conundrums. That's called Real Estate Investment Trust, or REITs. To discuss this a little more, I have with me Juzer Gabajiwala, the director of Ventura Securities. Juzer, hi, good evening, and thanks so much for joining in. Why don't we start off first by introducing this concept? It's been around for a very long time in the global markets, but I think in India, it's still relatively newer. It's been around only 3 to 4 years. So let's start off by introducing this concept.
Yeah, so basically, as the name suggests, it's a real estate investment trust. So, but it is, quite different from just owning a property. So you are allowed to, you want to buy a real estate, you can buy a flat. The real estate investment trust is basically allowing you to participate, you have a mall, or today you could have even an office complex. So there we have seen, now we have got huge office complexes across IT parks everywhere, and you can have, even a shopping mall. So these are all real estate properties and which are owned by bigger corporates. And so this is allowing them to, monetize. And if you want to own a piece of that property, so it will allow you to, participate by even investing a smaller amount of money. Otherwise, if you had to buy a property in a mall, you would have to shell out quite a lot of amount. So that is in short is a REIT.
All right. Okay. Just a simple way to understand, to understanding REITs, or real estate investment trusts. Now, where does return come from here? How does an individual, when they invest in REITs, what are the sources of returns? Is it in terms of appreciation of that unit? Or is it in terms of dividend? How does it work?
Yeah, so the REIT is also like a structure, is like a mutual fund. So that's how the structure has been, these are also regulated by SEBI. And here basically the income which the REIT actually receives is, let us say you have a developer. The developer has, developed a property. So we take an example of what is already there in the market today. And we all know, that Raheja is a popular builder. So the Mindspace has now got converted into like a REIT. So all the commercial properties are now been transferred into a special purpose vehicle. And these properties are all owned, and they in turn are given on rental to mainly corporates. So you could have, the big technology companies and all who have gone on long-term rentals. So the income of the REIT is predominantly from property rental. It would be more than 90-95% of the income would be on account of property rental. And this amount is then, any REIT has to distribute 90% of the money which they make. So in turn, they would pay out predominantly as dividend, or if they have borrowed money, then they would pay out as interest. So what the investor would get is mainly like a income in terms of a dividend. And secondly, the capital appreciation would depend upon how the values are changing of the property. And secondly, what is the demand for that particular units by investors, because these would be traded on the exchange. So if the demand is more than the supply, you will find the price going up. If the supply is more than the demand, you will suddenly see that there'll be a drop. Currently when you see in today's scenario, everybody is talking about a work from home culture. So we are talking about that not many offices will get occupied. So the perception is that your any real estate on commercial side will not.
Sir, largely it's rental income that's distributed to owners of REITs, unit holders of REITs. Now we know that if we go to put out our properties on rent, the yields are barely anything compared to the property price, which usually runs into multiple crores. The rental that we get is very low. So is it different for REITs, especially given the fact that it's not just residential, it's also commercial? In fact, it's mainly commercial. And on an average, what are the yields that these REITs have given recently?
So they don't have that much of a long track record. So one of the oldest REITs right now is Embassy. And one thing is that, residential rates of yield which are there on property is extremely low. So what you're saying is absolutely right. But on the commercial side, it is not exactly so low. So on the commercial side, you'll always find that they are slightly on the higher end. However, here it's not that they are going to be any substitute as an investment. So here you could expect a return of somewhere around 5% odd. But the beauty is that over here, the return which you get, because the SPV has gone for the older tax regime, the dividend is tax free. So here your dividend is exempt. So you don't need to pay any tax. Whereas in any other commercial deal which you would do, buy the property on your own and give it on rent, you would still have to pay taxes. And this also gives you an added advantage that you don't need to block the amount of capital which is required for a commercial property. Any commercial property you would like to say buy in a region like Mumbai will cost you nothing less than a crore and a half. Whereas over here you can buy 1 unit, 10 units, whatever is available. So.
And these units, of course, we do have almost 3 to 4 listed REITs on exchanges. So Juzer, let's talk about the liquidity aspect as well then. Unlike, of course, having to sell a property where you have to get many brokers, etc. involved, how easy is getting out of REITs comparatively?
So it is fairly simple because these units are listed on the stock exchange. So, so every minute there will be a trade which will be happening. So on BSE as well as NSE, all these units are listed. And every day trade will happen. So it's like you require a willing buyer, willing seller, and a price. So at the market price, a trade will happen.
It sounds pretty low risk really, because you're giving it out on rent, except of course if there are any cases of delinquencies. But again, since it works like a mutual fund, there is diversification of risk as well. So I just wanted to understand that what is the risk profile of a REIT, and also the suitability for different kinds of investors? What's the role it plays in a retail investor's portfolio?
So this, you'll have to actually look at it as more like a really different asset class, because it's not even a complete real estate, nor is it a complete equity product, because here it's the only thing which has as an underlying is the property. And it will all depend upon how, we all know that, maybe over a long term, because of even inflation and property prices would rise. So if somebody is, looking at a low level of investment, so one is that he's able to participate. He gets a reasonably, regular income. So you need to at least have a reasonably bullish outlook on the property side. And it could also mean that, there are many investors who are looking for even a Sharia compliant type, where they feel that, okay, ultimately it is coming only as a rental income. So many of those investors would look at investing instead of a property directly. They can do it in the REIT and get a regular flow of income. It allows you to be tax free. So predominantly where people are looking at a reasonably low risk profile in terms of their investment, and secondly where somebody is looking at a regular income.
All right. Well, I think, Juzer, with that we are completely out of time. So we are going to wrap it up. Thanks so much for joining us and giving us such good insight into the world of REITs. The fact that, of course, now we have more instruments as well available on exchanges, which make easy access, easy liquidity for retail investors. So it's all the more topic worth touching upon. Thanks a lot.
Thank you.